everyone, and welcome to Pearls of Wisdom with Nirmal Bang. I'm Avan Dabash. Let's get a sense as to what the outlook is when it comes to the startup ecosystem. Lots of companies have hit the IPO market, but what do valuations look like and what's in store when it comes to profitability? Will investors really make smart returns? And let's also understand where India stands in the overall startup landscape as compared to the rest of the globe. So joining in on the show is someone who has been a veteran investor and has invested in companies like Zomato and Policybazaar's PB FinTech. I'm talking about Sanjeev Bikhchandani, founder and executive vice chairman at InfoEdge. Sanjeev, good to have you on board. And what a transformation we've seen in the Indian startup landscape over the past many years. The fact that we have seen some significant changes that have been made, the emergence of new industries, the emergence of new technology, the emergence of new companies. What has been your observation?
First of all, thank you for inviting me. Look, this is a continuously evolving thing, and it's not as if there's been a sudden change. Yes, there was a significant reset around the end of 2021 when the Fed began to contract its balance sheet and interest rates began to go up. And that led to an ebbing of some amount of capital. It was called a funding winter, but the truth is that for good companies, there was no funding winter. Yes, some of the flaky business models stopped getting support. Some of the capital consumptive companies with low margins, the poor unit economics, they got less support than earlier. And to some extent, investors began to be a little bit more discerning, taking a little bit more time before investing. But that's always good. You know, it's always good to get rationality back into markets, good sense, common sense back into markets. There has been, a few sectors where there has been some euphoria. Quick commerce, for example, where some of the private companies have got extensive funding and causing increased competition. But I guess even that will ebb after a while when people realize that they can't do irrational pricing and get away with it for too long.
Right, and let's talk about Zomato in particular. On its way to become the largest e-commerce platform, given the fact that there is a duopoly, what's your outlook on how things could shape up for Zomato?
I have not said it's going to become. I said it has a good shot of becoming the largest e-commerce company in India, a horizontal e-commerce company in India, and that prospect remains. Naturally, there's been increased competition in the quick commerce area as more and more players get in and more players get funded. But having said that, I think Zomato is well positioned to defend its position and grow even, which it's doing very well. It is adequately capitalized. It's got a great management team. They're executing well. It's built a great brand, and they've got great supply chain logistics. So I think and they're going to continue to grow fast.
And the quick commerce market as well, that's poised for rapid growth. We're expecting close to $19.3 billion over time. Will Q-commerce overtake e-commerce, or has it already?
So look, all the e-commerce companies are getting into quick commerce. It's obviously become of a size and scale which is too large to ignore for the e-commerce companies. At the same time, we must recognize that India is still mostly an offline world. So, I don't see quick commerce plus e-commerce growing to more than 10% of total commerce. So I don't think the offline companies have got much to fear. There are many Indias and all will coexist.
The public market participants have become quite receptive now to startups, but at the same time, profitability is a key metric. Do you think that is going to be very critical for companies who now IPO?
So I had said this in 2021 when both Zomato and Policybazaar went public, both were loss-making. And I had said that you can take a loss-making company public so long as there's a clear path to profit, and within 2 or 3 years, you get to profit. I don't think the Indian public market investors are prepared to countenance a company that is going to make losses over the next 5 years or 7 years or 10 years. There has to be a path to profit, and within 2-3 years, they should get to profit.
Right, and given the kind of stake that you currently hold in Policybazaar and what that's worth, what's your outlook on how the company has fared?
So I think it was pretty clear to me, it was pretty clear to us when we first met them, that the team is good and the value proposition is compelling. So actually, we went into Policybazaar even before the product was launched, even before a PowerPoint was made, actually. It was a conversation and we shook hands. And that's largely because there was clear proof and demonstration that the value prop is compelling and this service is needed. And so we went in. It's a large market. There's a network effect. There's no other player there. First mover advantage. All those things also played a part.
And you said you don't invest in sectors, you choose founders and you choose companies. So what's the investment philosophy, Sanjeev?
No, I think it's not about attracting my attention, but in general, I have always said that you've got to be solving an unsolved problem. You've got to have natural traction. You've got to, hopefully have customers, paying customers, because I've always maintained that the customer's money is better than the investor's money. Because if you're getting the customer's money and you're getting it repeatedly from the same customer at a price that's higher than the cost, then chances are you have a viable business so long as you get enough customers. And customers' money will always attract investors' money. On the other hand, if you get the investors' money first, that's you don't necessarily have a viable business. You have a good PowerPoint, and you can make a convincing case to investors across the table. But until you get the customer's money, you don't have a business. So there's no guarantee that if you get the investors' money first, the customer's money will come. But there's a reasonable assurance that if you get the customer's money first, the investor's money will come. So I always maintain, get some customer money.
Right. And also your anti-portfolio is quite crazy. You got a chance to invest in Flipkart. You did not meet the founders and you said no. There was Snapdeal as well. Twice that you got the opportunity. You passed on Ola as well as Big Basket. Tell us more about that.
So this was around 2010, 2009, 2011 on, when we looked at all these companies. We looked at Myntra, we looked at Flipkart, we looked at Ola, we looked at Snap, we looked at a bunch of others. We looked at, Lenskart. And at that stage, it was not clear to us, A, how big the market would be, B, which of these companies will actually make a profit, and see how much capital they will consume along the way, and therefore could we actually go in there and back them in subsequent rounds. So for several reasons, we said we declined them, and some of them, of course, went on to become great companies, valuable companies, and that's okay. So we look at it philosophically. If you let go of a few good ones, it matters less than the one. If the ones as long as the ones you've done, they are good. You're good to go. So we've done Zomato, Policybazaar, a few others. We are happy with them.
Absolutely. And how are you approaching valuations in the current market?
So we really can't comment on valuations. The market decides valuations. They go up, they go down. We just focus on the underlying business. And that's what we discuss.
Sanjeev, pleasure as always chatting with you. Thank you for joining in.
So much. Bye-bye.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.